We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back. We are the Deal Junkies. I'm Gabe Johansson. I'm here with Mike Nuss and Trevor Howard.
I can see he doesn't even want to do this episode.
I don't even know what we're talking about. Mike proposed that he's going to teach us everything he's ever learned in 60 minutes. Is that what this is?
Yeah, and Bitcoin's wrapped into the middle of it.
And Bitcoin. We've talked about Bitcoin a couple of times.
Have we?
And it does not go well. We go down a rabbit hole. Bitcoin. Okay, so
Have
you're...
we?
Well,
so let me frame this. So before you came in this morning, we realized in the quick conversation with Tristan that the highest dollar per hour activity left in the remainder of my life is to convince my dad to trade his bonds for Bitcoin.
oh, this is what you're going to do. Trade bonds for Bitcoin.
Now I'm going to convince my dad to do that, so that way I actually have an inheritance.
So I got somebody sent me a video this morning, a news, some I don't know, some news thing. And there's a guy on there talking about doing apartment loans. Have you seen this?
No.
They're going to do apartment loans where they'll fund your loan like a normal loan, and then whatever money you're going to have left over for rehab or whatever is the money you have left over for rehab. But anything extra, rather than doing a holdback, they are going to make you put it into Bitcoin.
Yeah.
So it'd almost be like cross-collateralizing.
That's a terrible idea.
With a property or a bond. Well, that's what I said. The first thing I said is, well, that's not a loan I would take.
Well, that's stupid because it just ignores the cycles of Bitcoin.
It's too volatile.
Well,
Exactly.
so what they claim is that it's a 10-year loan with no prepayment penalty. However, in the first 4 years, you cannot
access it.
You cannot access the Bitcoin.
Yeah.
Wait, so you would buy the deal? They'd have an escrow holdback of your repair budget. You mean, or what?
They would give you the money to do your repairs if that was part of your loan, but a portion of your loan to I don't know if it's to offer.
Oh, they
leverage,
overfund your loan to put some in Bitcoin.
Well, it's kind of to me it's kind of like. I don't know if overfund is the word, but kind of to offer higher leverage, I guess.
Where does the money come from, though? So
it's part of your loan.
Yeah,
it's just part of your loan, but they're making you take a piece of it. Let's say they make you take 10% of your loan, and they make you park it in Bitcoin
it makes no
for
sense.
4 years.
$1 million deal. You put $250.
No, your
down.
lenders
They
is-
give you $750,000. Where does the Bitcoin go into that?
I don't know. We'll have to go watch it. But
they're just forcing you to invest in Bitcoin at the same time.
So they want more
and don't
money
even worry
now?
about the details of it, but think of this. So my friend
it's
asked,
like a cash out refi. Rather than letting you access the cash,
They
a
put
portion
it in
of it has to
Bitcoin.
go in Bitcoin for 4 years. Yeah.
yeah, so let's forget about all that.
Forget about it. That's what I learned today.
So-
I taught you everything I learned today in 3 minutes. Now Mike's going to teach us everything he ever learned.
You ready for the topic?
Yes.
Okay. Everybody loves nicknames, right?
Yes.
So we're going to talk about all the nicknames of Mike.
Micro Mike.
We're going to forget about Sussy, Nussy, and Peanuts. We're going to set those aside.
That's the best one, though.
Yeah. So
Micro Mike is the best one.
I've also,
Micro peanuts is the best one.
I've also had MMT Mike.
Okay.
I've also had Mary.
How'd you get MMT Mike? I've never heard anybody call you MMT.
He's just making stuff
From
up.
Deal Junkies, you got called MMT Mike?
No, people have said that. And then I got thrown into the Drunk Real Estate Fantasy Football League, and I missed the auction day, so they named my team MMT, Magnificent Mike's Team.
Okay.
Yeah. And then there's also, I don't know if everyone knows this, but there was a period of time where there's Marijuana Mike.
Oh.
Marijuana Mike came from not my consumption of marijuana, but from my ownership of marijuana properties. And so I was just trying to say a joke of saying, hey, we could talk about how I went from all these little nicknames to then now Bitcoin
You're going to be Bitcoin Mike?
Mike.
That your life lesson comes down to Bitcoin? Is that what you're about to teach us? No. I thought we were about to talk about deals that you learned.
Trevor is pissed right now.
He's so pissed. No, we can wrap all.
We're going to talk about
into a
Bitcoin
deal.
deals.
We can wrap all of this into a deal to show how what I said. All of these life lessons of being an owner, being a loser, being a winner, not knowing anything about all those into a really good case study.
Tell me. I'm listening.
Okay. We'll start with win then play. The thought process of winning then playing. And so the starts back from, well, this again, I can't tell a story. Like, we have to jump around in time frames. Okay.
We'll get it started.
We're going to talk about the property we bought on North Interstate. So we bought a property on North Interstate with the intent of it is in one of those very unique locations that you could put a dispensary in it. Okay.
What's North Interstate?
It's a street in Portland.
Okay.
The Max line goes right, like the Max, there's a Max stop in front of this piece
So
of
this is in
dirt.
North Portland.
Yes.
Okay.
And so let's even go back further, social capital, right? So over this period of time, I built a brokerage. I've got a broker who is in the marijuana business who buys real estate for... So that's a relationship. I know a developer, my friend Lane, who's buying all these pieces of property to put together for apartment deals. And so I know Lane and I know this other broker. And the other broker is doing a campaign, a marketing campaign specifically in these zones so they can find another dispensary. And so then they do that and they get a phone call from Lane. And Lane's got all these deals. And then Lucas is like, yeah, I talked to my friend, this guy Lane. I was like, oh, I know Lane. So got in the middle of all that, helped them put together a deal, structured a deal, and then formed a partnership with Lucas because of the social capital that we brought to the table, right? So he's trying to find the deal, locates the deal, doesn't have the social capital to get the deal done. I have the social capital. We do due diligence. We figure it out. We ultimately buy the deal. And this is important. What we did is what we structured is Lucas raised some private capital to go in first position at a relatively low interest rate. We raised private capital to go into second position at a higher interest rate. So
when you say raising capital, they were raising debt.
Debt, yes, capital's debt. So he had a lender that was willing to lend it a good rate at a very low LTV, and then we had a lender that was willing to lend at a higher rate at 100% LTV. So
Combined.
In second position, correct. Yeah. So we could go buy this property with 100% of debt. And here's where I say win, then play. At this period of time, the state was shutting down. They're putting a moratorium on applications for licenses, dispensary licenses.
This was a weed building?
This was a weed building.
Okay.
So this is a dispensary. So that's where marijuana Mike came from, is me just understanding highest and best use and all this stuff was I bought a property
Consumer
that became...
to owner.
I bought a property in Hillsboro.
This is why we have weed shops on every corner. Because of Mike.
Thanks, Mike.
I previously bought a property in Hillsboro that converted into a dispensary, so there's track record of knowing how these things happen. So as we were buying this building, and here you got to understand Lane. Lane is crazier than I am. Not crazier. He thinks at an ADHD level. He's further on the spectrum than I am. So when Lane gets...
He's like Trevor.
Yeah, and Lane's buying 3 properties, but he's putting them together. He doesn't need all of it. He's trying to scrape some land off, but, we need to move the property line 6 inches because if we move the property line 6 inches, I can have more windows on this side. You're like, that's the level of detail that he thinks on the design side. So Lane's thinking this thing through, delaying our closing... and doing a survey and a lot line adjustment, and like the property isn't even created yet of what he's actually going to sell us because he's taking some of it. But we need to get control of it so that way we can sign a lease because we have a tenant who wants to rent immediately $6,000 a month. We're buying it for $500. We're going to pay you $6,000 a month. We don't care. We're going to sign a lease. We need to get the lease signed so we can get our application at the state. So everything's based, the value of this property is based on this application getting into the state before moratorium kicks in, which then says all these things need to happen, which ultimately meant that we took a rent check and a security deposit check and signed a lease on a property that we did not own.
Yeah.
So the lease was subject to us taking the ability to have this landlord position in it. So we had all that. And then we bought a property that wasn't really the property because the land division wasn't done. Does this make sense?
Yeah. Everything's pending.
Everything's pending. And so we actually owned it for a year before we could record this lot line adjustment.
You owned it on like a land sales or something?
No, we bought it outright. We just knew this was a stipulation that was going to happen post-closing. Okay. So we bought it subject to this open land use case, knowing that the land use case would close. And then in all that, and here's the other thing is this is a duplex. This isn't a commercial building. This is a duplex with the zoning that allows it to be converted into a building. I know what it costs to convert a residential structure to a commercial
Seems like a lot
structure.
of work.
Huge amount of work.
For a $500,000 deal?
Dude, I'm making $6,000 a month. We're making $3,000 a month of net positive cash flow the day of closing.
All right.
I don't know.
Fair enough.
Zero down for $3,000 a month of net positive cash flow.
I'll take it. Is this a cannabis user?
It's a cannabis company. It's a fund. So what we ended up, and here's the thought, and here's the important thing of like as an owner is you need to understand who your tenant is, right? So here's our thought. We had a lot of dispensaries clamoring over us signing an agreement with them. We ended up going with a regional fund because of their deeper pockets, which had pros and cons. Now I'm learning the cons. I saw the pros going in. I learned the cons through an ownership. So that's why I wanted to bring this deal up, because I've learned a lot of lessons through it. So I structured a partnership with the brokerage, bought the property, and then immediately started taking distributions. We're making $6,000 a month. They had to convert the building part. It was a TI. Not only do they have to do all their TIs, but they literally in the lease had to convert the building.
And it's triple net too.
And triple net. So triple net lease, they then had to convert the building, which is $300,000. So their cost to convert the building was going to be more than half of what we paid for the structure. And then in the process, making our property worth more. And then the plan
How
was...
long's the lease for on that building?
It was a 5-year lease with a 5-year option.
Yeah, that's sick. They're just going to
Extension.
make your building worth way more and fix it up.
Yeah, and so in that process, we would then refinance out all that private debt, get
Yeah.
long-term debt, and still cash flow. So that was the play. And the win then play was, well, we're taking distributions the whole time because they have to pay rent. So that was in 2019, like June of 2019. And then this little thing called COVID happened. Actually, it was in 18. Excuse me, it was in 18. So we take distributions for 18 months or so, and then all of a sudden eviction moratoriums happen.
But not on the commercial side.
Yeah, they did for 6 months
In Portland.
Okay,
not in the rest of the state then. That was just a Portland thing.
Maybe, I don't know, but there was an eviction. No, it was a state eviction moratorium. Was a state thing.
On commercial.
On
lease?
commercial.
Oh, I don't remember that happening.
Gabe was evicting people all day long.
We do manage some commercial. It's a weird conversation about how to get rid of a commercial tenant.
Yeah. So 18 months have passed. And so think of it this time from their standpoint. In that 18 months period of time, they had hired engineers and architects, and they gone in for permitting, and they gotten reviewed. And then they came back and was like, well, we thought this was $200,000. It's $300,000. And then I worked with them. And here's the problem is you're not communicating with the owners of the company. When we're doing this really quick stuff, we're communicating with a broker who's representing them as a tenant.
Yeah.
They are not even looking at what they signed. So the owners didn't even realize really what they signed. And now they get this review from the city, and now they get oh yeah, it's going to cost you $300,000. You've already spent $66,000 times 18. So you spent 128 or 108, whatever that math is, 118. So it's just bad. It's just bad money after, good money after bad. And they're just trapped in this lease and they keep spending it. So they then stopped paying rent when COVID happened. And so when that moratorium, I think it was either 3 or 6 month moratorium, I just started negotiating with them. I got elevated to a new guy who had a higher, like number 4 in the company. I just started negotiating with them on the lease, which is, this isn't a problem. We'll give you an option to buy it. You've got this much left on your lease. You're going to have to pay out $300,000 anyways. Here's how we're going to restructure it. For every dollar you put into the building, I take it off your lease. Like at the end of the day, all I want you to is I don't need to make cash flow off of you. I need you to improve the building. And we could never come to agreement. And here's the thing is people with big pockets always think the person on the other end of the table is just dumb or stupid, and eventually they'll give up.
So they had the money to pay, but they didn't.
Yeah,
because it was
correct.
A moratorium.
Exactly.
Which is bullshit. It's kind of the cannabis industry in a nutshell right there, which is why a lot of people don't want to work.
And private and venture capital, because the owners are venture capitalists. They just don't care. They're so detached from the problem, they just don't care. And so ultimately it came down to like, oh, we'll just buy the building from you. I'm like, great, make me an offer. So we had paid $500, they made an offer for $150,000.
They just have no idea.
Yeah. And at the time, so this was 2020, now we're getting into 2021. So land value hadn't crashed yet. But, I would have worked with them. They just weren't reasonable. So at that point in time, I was like, well, fuck you.
They owe you $300 on a lease, and they're going to offer you $150 to own the building.
Exactly. Yeah, right.
Oh.
So that's obviously, that conversation stopped. Eviction moratorium goes away. They start paying rent again. Like, okay, great. So here's where Bitcoin comes into the conversation.
So you serviced it for 6 months on your own?
Yeah, correct. Yeah.
And it was not that much.
But when that happened, we stopped taking distributions, right? So at that point in time, we already had some capital. We weren't taking every penny of distribution. We were building up reserves. We were taking distributions. And when we had the signs on the wall or on the writing on the wall, we just said, okay, no more distributions. We need to build up a war chest. This is where Bitcoin comes in. So we need to build up a war chest. We need to be prepared because at some point, this is going to be a non-functioning asset, potentially a non-functioning asset that has no equity. How are we going to cure this problem? So we just started storing capital. So at some point from like mid 2020 to 2021, we built up like a $90,000 war chest of capital. They had started repaying again. And then we had a discussion of, well, we're not going to take distributions, but what are we going to do with this capital? And at the time, I think we had like 90 grand. We did some math of what they were going to spend, and we could put, we needed 60, maybe we should put 40 into Bitcoin. And at the time it was around 20 grand. And as I'm being more vocal on the monetary policy side, and I'm learning more and I'm understanding more and I'm getting more notoriety and I'm having more conversations, my conversation was, boy, Bitcoin's getting pretty cheap. Maybe we should, and as I'm innately understanding that the floor of value for this asset class is rising. And I should even back up. So prior to ever buying this building, I had looked into crypto and Bitcoin in like 2016, 2017, 2018, as I'm learning monetary policy. And at the time, I was like, okay, well, this is brand new. Here's the things that need to happen in order for it to gain its notoriety, in order for it to have safety, and in order for it to become what people think it's going to become. And then I just didn't pay attention because it didn't. I looked at it and said, well, I can do way better in real estate how I do it. I don't even need to care about this. Fast forward a few years, start getting into this problem with this deal. Well, let's look at Bitcoin. Oh, gosh. Well, now I'm seeing the metrics. I see how it works. There's some floor of value there. I feel really good at 20K. And this is where then partnerships in action and in not taking action. So 3 partners, there's me and my old partner, and we're 50% ownerships with our broker. So the broker already owns the Bitcoin, already understands crypto. He and I are creating a plan saying, hey, this is what we could do. And he's on board with it. I'm on board with it. And now we're into 2022. So we've built up a war chest of capital. We're into 2022. My other partnership now is not going great at all. We're just not even communicating on so many different levels that we never just created a consent in lieu. It's all we had to do is say, okay, he didn't say no, but he wasn't against it. But we're struggling on so many areas. It's just, well, in this LLC, all we had to do was take 10 minutes to drop a consent in lieu. We had to sign it, and then now we could transfer 40 grand of cash into 40 grand of Bitcoin.
What's a consent in lieu?
It's just saying, hey, in lieu of having this meeting, the members of this LLC have agreed to do this thing.
Gotcha.
So without that consent in lieu, if the broker and I had just taken cash and bought Bitcoin and had it lost a lot of money, my partner could sue us all. Right. And so it's just a step that needed to happen that never got happened because of distractions. So now this matters because for me, as evolving into a person who understands economics, because of a real estate person who does good in real estate, looked at it something 8 years ago and made a decision based off information 8 years ago. Looked at that information again 4 years ago and said, oh, this is a little bit different, but kept the same opinion from the 4 years prior. But now I've got a time that I can go reference that I put energy into and thought process into and math behind, and now look back and see, well, how did that play out? So if you look at that and how that plays out to when we got through the lawsuit and everything done and everything settled, we started looking into putting it on the market in December 2023. So if you look at it, it's like 60 grand in value. That's kind of what I was pulling up earlier.
What's 60 grand in value?
Bitcoin at the time, 42,
But you're
43.
talking about putting your weed building on the market.
Yeah, correct.
Also, I have a side note. What was that? What did you think that building was worth? Because you have, 36,000 of NOI, right? At a 7 cap for a triple net?
Yeah, but once they stop paying, it's not worth anything.
No, I know. But your original plan, because your original
triple
plan
net lease at a triple net lease at $6 grand a month, so 72 of NOI.
Well, no, but aren't you? Oh, because you did. So it's like $1 million building.
Yeah.
Okay.
So we bought $1 million. The plan was to buy. It was 900 was my number. So buy it for 500. They put 300 into it. It's worth 9.
Okay. Yeah, that makes sense. Cap rate.
And then we get 600 in debt, pay it off, split 100, and have a lot of cash flow.
Yep.
That was the
makes
plan.
Sense. Got it. Yeah.
But so as this is happening, we're in distress. We're sitting. This is Bitcoin as a store of value. That's my aha moment. Is I've learned how Bitcoin is a different store of value now than how I looked at it 8 years ago. It was different 4 years ago. It's different again now. Does that make sense? So that's where
Why is it different?
Because the amount of money that's got in, how it's got in, how it's been pulled out.
Well, because big money's there now.
Exactly. So essentially the original and this is what this is where coming into here is having a text conversation with my dad, because now my dad's asking me a lot of questions, the old man questions that can't wrap their brain around it, that are really confused, really looking into the wrong information. Does that make sense? And so that's where that conversation of, well, my highest net worth is educating my dad. Sorry, I don't where you got me lost.
I don't know where you're going. You're wrapping all your life lessons into one deal.
Yeah.
Have you learned anything yet, Trevor?
I don't know what you're talking about.
Okay. Well, store of value. So that's what's been.
What makes Bitcoin a different store of value today than it was
correct
4 years ago and 8 years ago?
And the log that I had on my eye is how I define store of value. And so when everyone says no to Bitcoin, what do they say no to?
What's volatile?
Volatility.
Yeah, because what do I get? What does it do? Where do I store it?
Ignore all that. Okay, if you can
it's
get
not
beyond
a store of value, it's an investment.
No, it is a store of value. That's the problem. It is a store of value. The volatility is what keeps people away from it.
So what do you think
you're
the
afraid
floor
it's
value
not.
is,
That's
then?
yes. Let me get to that. So you think the volatility is why you stay out of it, because it's not a store of value. But that's where if you look at it in time frames and where the 4 years come from, is you can see that it's like a tide raising every 4 years. And that comes with how the supply level is created based on the code that was created. A lot of stuff that I need to learn that I haven't even learned, and I don't care to learn.
Every 4 years they do a halving.
Exactly. So one of the questions my dad asked was, it's all fake, 97,000%, right? So essentially, billionaires are what matter. Our opinion doesn't matter. It's billionaires' opinions that matter. And so he points it out. Well, you had made, how many billionaires were made in 5 years who were never a billionaire? And my answer to him was, he says 97,000 of that is just fake. And the answer is no. 20 to 40 of that is fake billionaires who became billionaires. Does that make sense?
You're talking about people who bought
miners.
Bitcoin?
What's the 97,000 number?
That's what it's worth now.
Oh, 97,000.
Yeah, so it was worth $1 a coin when it was published or came out, and you could buy it. Now it's worth 97,000 a coin.
Was it even that? Because
I don't know.
Okay.
Yeah, just the number he used. I don't care. Because again, the level of details matter. I don't care about these level of details because I found the other answers in the others. But essentially, if you look at it, you created you have all these gains, and then you have gains being taken out. So that's where your volatility is created. But then the 4 year cycle, that's how the mining is, and that's how slows down the creation of supply. The biggest thing that I always thought the problem was with Bitcoin was it is for the average Joe. It is for the working class man. That's how it gets sold. It's sold out of fear of inflation, fear of imprinting. My aha moment was it's not. It's for rich people. The average Joe can still access it, but it is for rich people as a place to store their wealth. That is what it has now become.
why?
Because it's cleaner, it's safer, it's easier to maintain.
Why is it safer?
So the first law of money, Michael Saylor has a really good keynote on this. And he's talking about the first law of money, which is the length of money is based on the cost of maintenance over a period of time.
Like to physically produce the money?
Think of it this way. So yeah, to me, if you're paying a fiduciary 3% of your gains every single year, right? It's going to erode, or the inflation side of it. So there's ways your value erodes. So if you think of Bitcoin doesn't erode based on inflation, and you only purely from a store of value standpoint, think of a very, 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 very wealthy human being, and all they need to do is store value. Okay. They can pay 10% to put their worth in that value, never pay anything again. And because it's digital,
What do you mean pay 10%?
that's your fee to get in.
That's what it costs to buy some Bitcoin?
Sure.
Okay.
Right. So you have to create a purse. Yeah. This is the math that he used. Okay. So now you paid 10 bips to now own it. Well, then that means your cost of maintenance, because it's digital, is zero for the life of ownership. So that means that money will last 1,000 years. If you look at any other asset class, it has a lifeline of ownership. Now, there's flaws in everything. And so when I watched this keynote, I go into it with the skeptic mindset of, well, what's the flaw? One of the flaws was real estate. Real estate, inflation adjusted return, 10% on his graph. Well, the maintenance of it, the cost of that is built in, right? We have maintenance fees. That 10% is net of maintenance, net of insurance. And so he's talking about the physical threats. There's threats to money wherever you store it, right? If you store your money in debt in the bond market, you have threat to inflation, right? If you store your money in the stock market, you have threat to that company going down. from a very, very wealthy standpoint, you have to deposit wealth somewhere and you have to store it somewhere. Recently, when interest rates were really, really low, you would store it in real estate right now, or you would store it in bonds, right? Where we're storing money, and you hear me talk about this a lot, is allocation. And because of the log of my eye that I created 8 years ago, I essentially said the digital asset class lies somewhere between, it's either in gold, it's either in hard assets, or it's in bonds, fixed income, financial assets. What I failed to recognize is it was creating its own class of digital currency. Or digital assets, excuse me. So it's property. It is literally property that you can deed and own through the blockchain. So think of it as real estate with a deed.
Sure.
Right? So the real estate is the coin, and
It's
then
like
the blockchain is the
EFT
deed.
type stuff you're talking about?
No, you can own the actual coin, right? You have ownership of the coin.
Okay.
And then that is documented in the technology of the blockchain.
Okay.
So how does this tie into real estate, and what did you learn?
I have some ties to real estate. Let keep my
So
just thought here.
yeah, so my thought process there is I knew I was going to store all of this wealth here because I was going to need to access it.
In Bitcoin?
I would just regardless, because this real estate deal blew up because of my tenant. I was going to have to sue him. That was going to take time. I was going to have to sell the property. That was going to take time.
Okay.
I couldn't put the property on the market because that would undermine my lawsuit. Right. So I had this time period of, I knew, know how long it was going to be, but I knew that I wasn't going to need this capital. It started at X amount. It grew for another year. And then I got a lawsuit, get through the lawsuit. It shrunk during that period of time because I have to service debt. And then at the end of the lawsuit, it grew again.
And you had all your money in Bitcoin, you're saying?
No, I could have. So we made a decision. My partner and I did all the math, and we said very little likelihood we get down below 60 grand of cash. So safely we could put 40 grand of it and store it in Bitcoin. When you actually look at it, at the end of the day, we got down to 52. So we could have safely put 40 grand in Bitcoin for that period of time. We would have got through that entire process. We would have got down to 12 grand in our bank account. Then the lawsuit would have gone through. The bank account would have got filled back up. We could have put the property on the market and sold it.
And then you would have had like 80 grand.
Correct.
Putting 40 grand.
Or Bitcoin could have dropped in half.
Yeah, I wouldn't
could have
do
lost
that.
even more.
The risk seems
But
too
that's
high.
okay.
It's easy to look back and
You just haven't applied the math to it. So let's actually
you're applying backwards math. Like I can do the math looking backwards on anything and be like, yeah, I should have done that.
Okay, so what was my actual risk to Bitcoin going down?
So if you put, well, you would run out of money and then not have enough money to service it, because let's say you put it in Bitcoin and it drops. You
No,
bought it
'cause
at
I still
40,
have
it goes
40.
to 20, right?
Okay.
Now you just lost 20 grand.
Which it always
So-
does. It takes an 80% dip at some point, and then it goes back up again, right? When you follow the graph.
And this is exactly why it matters. And this is where you need to understand. So
you just
as
thought you were buying it at a low enough point.
I had enough knowledge to know that this was a good value, and I was speaking significant multiple times that this is good value. You want to know what the lowest it was it got down to?
After that point,
So
It got down
essentially,
to about-
it went from 20 to 17. When it got down to about 17, that's when we were getting these final things of we should just do this.
So why didn't you do this?
Because we just did not make a decision to do it.
Hmm.
This is now where partnerships and distractions and being too. Does that make sense?
Yeah, sure. So you
Yeah.
could have put this money in lots of things that could have made you more. Then you have opportunity cost, you made more money. Sure. What's your point with like, what did you learn? Like, how does all your
It
life
is a
lessons-
store of value, because if I would have done that, say we then would have sold it in December of 23 when
Sure.
we're getting ready to put it on the market.
You had more money. You made 40 grand.
Sure.
Cool.
Okay. Well, what if we didn't actually sell it until March or June? In March, it was worth 64 grand. What if we actually just sold it, sold the building, kept the money in Bitcoin? Now it would be worth 320 grand. So what we ultimately did is, because we had to sell that asset for less, we sold it for 375 grand, but we had $500,000 of debt on it. Well, that's a problem. So how do we solve that problem? They're private lenders. They're not a bank. We need to solve the problem. So we go buy a different deal, a now new flip deal. We take that second position lender. They come off title. They move, their note moves into escrow on the next deal. So now we're no longer over leveraged on the duplex we need to sell.
But you just have this debt now you accrued with nothing against it. Then you got to go make more money to pay it off. So you're just saying the Bitcoin would have paid it off?
Exactly. Not only
Sure.
paid it off, but would have put profit in my pocket.
Yeah, but looking backwards, had it not gone that way, then you just lost
Okay.
more and had more. Like,
Sure. And this is where you just need to understand where those floors of value come from. I had recognized in that period of time that we are at another floor of value, or it wasn't going to go past that. The other part of that, so one reason you don't do it is because we didn't have a 4-year time frame. But if you can look at that as a 4-year time frame, do you have any capital anywhere that you're storing that you know it's going to be stored for a 4-year time frame?
Yeah, I get what you're saying, but like it's really easy to do looking backwards and be like, I should have done
What's interesting about this topic is everybody is cut from a different cloth, and everybody has a different risk tolerance, and everybody is sort of like drawn to different asset types. And for me, when Bitcoin was at $6,700, I decided, okay, I'm going to go buy some. And I think I set aside $20,000 or $25,000, and I set up my Coinbase account. And I did my little thing, and they were, they have to put a penny in or do whatever they do
to verify your account.
And the next day I got an email that says your credit union has blocked this transaction. You cannot buy it. And I'm like, okay, that's a sign from God. I'm not supposed to buy Bitcoin. So I didn't. Then it immediately took off from 6,700 to 67,000 when it went on that big tear. This is like 4 or 5 years ago.
Yeah, she would make.
And I'm like, shit, I would have made 10x.
Mm-hmm.
But what I did in my mind was I pretended that I had made it because I'd already set it up to make the deposit and it didn't go through. So during that time, first off, when it hit 20 grand, I would have got out, or when it hit 50 grand, I would have got out.
Yeah.
And so I started to look at myself and how I would have handled that asset type. And every time it hit a certain point, or when it got to a certain point and I bought some and it went down, I would have got out. And so this is what people do. This is what retail traders do. They trade on emotion, right? Mm-hmm. And so I was emotional about it. Luckily, I wasn't using any real money because I would have been pissed that I missed out on the big rise or whatever. But what it told me was I should be buying an asset type that when it drops, I get excited and I go buy more. And so that's why I buy real estate because I own buildings. And when buildings go on sale, I don't go, holy crap, I wish my SREO didn't just drop 20% in value. I go, it's time to go buy more deals, right? So that's just how I know I'm a real estate investor instead of a crypto or stock investor.
Yeah, you're telling me like this building you bought with no money, you were going to go make 400 grand in equity, pull 100 grand out, and then cash flow on it and own for eternity. Versus like, yeah, you could go make
but you're still
Bitcoin,
not like actually listening to my math.
No, I understand, but you're looking backwards, being like, yeah, I should. And I'm like,
if you can show that, can you show Bitcoin as liquidity on your PFS?
Probably.
Well, this is what I'm trying to get to is now there's a whole lot of lessons to learn. Why do you look backwards? To find patterns. And if you look backwards, there are clear, distinct patterns. Now, if you understand, and this is what I'm trying to get to, this is life-changing for me because this is missing from what identifies me as from an economic identity, right? A lot of people rely on me for what I say. And if I am missing an entire asset class that has been created that now has, this is the key, a market cap large enough to not go away, not knowing that is problematic to how I understand and see how everything goes together. Trump trade is the exact component of that. I think the first 25 bips of that 50 bip increase was fear of inflation. I think the second 25 bips of that Trump trade bet that was made prior to the election was Bitcoin related. And we saw it because money came out of the bond market and went into Bitcoin. And then when he was elected, what's happened? Nothing. Money has not come out of Bitcoin. Money has not gone into the bond market. That gets into exactly what Gabe was pointing to. I got a little email from my bank that said, you can no longer do this. That is what Trump changes. Within the next year, the expectation is now banks can start owning it.
If they, in fact, legitimize it. And there's so many different coins.
But it's already been legitimized to billionaires.
Well, yeah, and especially when Goldman Sachs has funds and there's ways that you can invest in this through your actual trade accounts.
Yes.
To me, that legitimizes it. It also says that we're going to get a level of regulation we didn't have before. And I think that back when Bitcoin was, $2,000, $5,000, whatever, there wasn't any regulation around it. The big fear was they're going to come in and squash this thing and it's going to go to zero one day, which now we're beyond that point, which is your point.
Yes.
It's hit a magnitude. It's got a $1.7 trillion cap. Goldman Sachs is trading it like it's hit a level where they are going to add regulation, but they're never going to wipe this asset type out. Crypto's here to stay.
I looked at it as it was either it stays and the dollar goes, or the dollar ultimately wins and it goes. The reality is it's supplemental.
So as a store of value, you've got some choices. You can sit in cash.
Mm-hmm.
You can sit in gold.
Mm-hmm.
You can sit in bonds. You can sit in crypto. I suppose
you can sit in the stock market.
You can put it in the stock market, but to me, the stock market's not really a store of value.
And here's the thing:
position.
is equity. Everything is a store of value. If you think of equity, right, a credit market to an equity market, all we have is a crap ton of equity, private equity. It's either stored in the stock market for short periods of time. It's either stored in gold. It's either, right. So
this is the allocation you talk about.
Exactly.
How do we move it around from pot to pot? So if
Yep.
you're sitting on excess liquidity that's not going to go into a real estate deal,
Yep.
you may want to store it in Bitcoin rather than gold or bonds for the next 4 years.
And now here's where our opinion doesn't matter, and here's where this became, because I got in an argument with a guy who used to be an LP. All he did was LPs. He got into crypto, trade all of his LP stuff into crypto. I got in a fight with him and said, "You don't know anything about the store of value." And then he started making fun of me. And then I started like, why the fuck? And then I realized, wait, this guy's a lot wealthier than I am. What? And then I started asking questions. And so, okay, well, now the store of value component. If you're a billionaire, what would you rather do? Put $1 billion in gold? And then how much does it cost for you to hold that $1 billion of gold?
You got to pay to store it.
You got to pay to
buy
store it.
some real estate, because you just told me you could go predictively make 300, 400 grand in this building, repeat it over and over versus you.
Well, no, let's go put the math. I bought the building in 2019. I could have bought it I could have put that money into Bitcoin.
The difference is,
but you could do that repeatedly as many times as you want, and it took you no money.
And the point being, we have no control over pushing the value of Bitcoin, gold, bonds, or stocks.
You have full control.
We have full control as real estate operators.
Yeah, well,
you turn nothing into something versus the Bitcoin you then put money in.
I'm not stopping being a deal junkie. You're so pissed. He's just mad because he thinks I'm no longer a deal junkie. No, I am even more of a deal junkie.
Real estate only.
No, not at all. It's supplemental to everything, because what do you do? So here's the first thing that I'm looking at is, okay, where do I have inefficiencies? As a property manager, I hold maybe $200 to $400 in reserves for my clients.
$200 to $400?
Yeah, in reserves in my trust account for my clients.
Per month you pull?
Per property.
What are you talking about?
Per property. As a property manager, your client has reserves in your trust account.
Is there a standard rate?
It's very low. If you're
PMs here.
But I can't take my CTA and park it in Bitcoin.
Correct. So just fucking hear me out. My clients have maybe $400 to $800 at max per property in my trust account.
Okay.
I have 4, 8, 9 grand per property in my trust account.
Personally, to secure against those.
Just because from an operations standpoint, I want my property management company to be making the mortgage payment and all these things. But these are assets that they don't dip into those reserves hardly ever. Does that make sense?
Sure, yeah.
So I can lower those reserves to in line with everyone else. I can treat myself like a client, like a real client.
You're saying take your own reserves, and rather than leave them in cash parked in a CTA, you'll park them in Bitcoin, so at least they're doing something.
Correct. And it's not even
liquid.
Again, stop. Just fucking stop. I'm not saying take all those reserves and put them in Bitcoin. I'm saying on top of that, I also have the LLC that holds reserves. Okay, so I'm double reserved. I can take those excess reserves from the CTA account, move 100% of those reserves to the LLC, take 50% of what I just moved to the LLC, and then store that in Bitcoin.
Sounds like you have too much money. We got to.
Yeah, that's exactly what I'm saying. Is my system that I created for ease of my life has created excess savings that don't need to.
So if you have enough cash to be able to sleep at night, and it's really too much cash, you should park it in something that does something for you, to where you can still show the liquidity and it's doing something, whether it's stocks, bonds, or crypto.
If this is your reserve account, I wouldn't put it in Bitcoin, but if it's just excess cash,
where would you put it? Would you put
it
in gold or cash?
I would leave it in the reserve account in a money market.
And the reason you pick gold over Bitcoin would be the steady price.
I wouldn't pick gold. I would just put it in a money market, because your reserve account, the point of the reserve account is to be able to access them, like, now.
It has to be liquid. You got to be able to take it.
And you can't have that drop down in value, is why I wouldn't put a reserve account in Bitcoin.
Did you hear me say I'm putting a reserve account in Bitcoin?
Yeah, you're saying I have a reserve account. I have all these extra reserves that I need. So, yes, it's your reserves past your reserves.
He's talking about excess liquidity that he doesn't need to tap.
Sure. Put that wherever you want.
I have a comment about crypto.
So, but here's the other thing. Okay. As a development company, your liquidity never gets to zero. You can do an evaluation of all your companies for the past 4 years. What was the minimum that your bank account got to?
Negative something.
Yeah. See, he's using his real life scenarios to project into me on why he wouldn't do something.
Mike's got money. You don't. You have buildings.
But here again, all I've done is ask questions in my own real life to create different answers. But I'm not the one that needs to answer them to define whether or not this is an asset class with value.
Okay, so it's November. What's today? November 22nd, 2024. Mike Nuss has spoken. Bitcoin is a store of value.
So can I finish my math, please?
Are you going to put money into it right now?
Can I finish the math?
Are you going to go buy Bitcoin now?
Yes, I am literally creating the process to create
right at today's price.
Here, can I finish my freaking statement?
Well, spit it out. I've been sitting here all day waiting for the lesson. Tell me the lesson.
So again, what did I do? I went to start to combat someone who didn't know the store of value. So I started doing the math. And then what I realized and what I came down to was, okay, so $1,000 in 2016, which was this meme, he named the Mike Nuss meme because I'm an idiot.
You have a meme?
Yeah, that $1,000 would have turned into 151. And then I posted this on Facebook, right? How long will it take Bitcoin to, because then I did the reverse math. So what would Bitcoin have to be worth for $1,000 invested today to become 151 grand? Okay. The answer is $14 million. Okay, well, when Bitcoin's worth $97,000, 14 million is only a 15x. So a 15x on something that came 97,000%. What I was doing was it'll never become 14 million because, well, if you're projecting 14 million, you're projecting all these assumptions that you've made about banking and access and macro capital and reallocation. Well, no, that shows up in the 97,000%. It doesn't show up in the 97x. It doesn't show up in the 15x. Those assumptions at some point are taken out. And where it's taken out is when macro money gets in. And then those floors are set. And so to answer your question, at 98,000 on a 4-year window, I have no problem investing on 98,000. Okay. Now, I also understand how macroeconomics works. So what I will do is wait for the jobs revisions to come out and look at the jobs reports and kind of look at where we're going for the next months, and I'll dollar cost average in. But the math and what I posed is a snarky question. I'd already made up my mind that I've changed my mind about this asset class. But I wanted to take that, well, 1,000 now means you need 14 million in Bitcoin, and then threw that as a question out there to the world. Well, yeah, 1,000 turning into 150 is not life-changing. Getting 10 grand in over the next 2 years and turning that into whatever the math was.
You said 15 3 million. Times. So putting 10 grand in, you get... You're saying 15 times.
That's the market cap. So 97 to 14 million is a 15x.
Yeah, so you're saying if you put 10 grand in, you'd have 150 grand.
That's not how the math works. If you put 1,000 in at 97, it would become 151,000.
Okay.
So if you put
and you're saying the same
so it'd be 15 million.
97 to 14 mil.
So that's instead of 1,000, if it were
151x.
Whatever, dude. It's fucking zero.
I don't know what you're telling me.
151x.
You're saying not. So you put in 10 grand to turn it to 1.5 million.
No, 1,000 will turn into 150,000. So if you make it 3, it's 4.5.
So a 150x.
Yes. So
and
if you put in 10 grand.
Yeah, 150x instead of 15x. That's all.
Yes.
You're just missing a zero.
Yeah. So if you put in 10 grand, you'll have 1.5 million. You're saying.
I have another. This is an interesting. So I've probably studied.
No, you're not listening to me. 1,000 turns into 151,000. Yes. That is the math.
Okay.
Forget about 15 or 150.
Yes.
That is the math.
Mike,
so if it's 10, it's 15 million. So if it's 10,000, it's 15 million.
1 times 151 equals 151.
Is it 15? Yes, I understand what you're saying. What is your point?
I have to side rail us here just for a second. So to me, the benefit
It looks like he wants to kill me
we've
right now.
he might kill you. One of the things we've
No, this is the problem with Bitcoin. You want to insert and project all of your bullshit into this.
I'm just
equation.
asking you questions.
No, you're not. You're literally saying this is why it's problematic, and you're projecting your own problems into it. And what I'm saying is the reason it is a store of value, and the reason I will dollar cost average at least $10,000 into Bitcoin in the next year is because macro money is now there. The store of value is there.
All I am saying is if you were to take all of your reserves and put it in Bitcoin, I would not advise that.
Or sell all your real estate and put all the money in Bitcoin.
I'm using one example to show how I have wasted my business and can convert it into millions of dollars
You're
potentially.
thinking about a lot of nonsense, and you could have bought more deals rather than thinking about this.
Okay, yeah, I could use that $3,000, and what would it fucking buy me? A lot of work to make $300,000.
You know what's
or
funny?
I can spend that $3,000 and it can make me $4.5 million.
Most guys-
here's where I get at is when I did the math. None of the pie in the sky it doesn't have to turn into a currency to become 14 million a coin.
Have you heard the statement before? Past performance does not project future returns.
Again, he's just projecting bullshit. Like, are you trying to gaslight me now, or are you just trying to...
The most amazing part of this argument is that Mike is the guy who should be saying Bitcoin's bullshit, and Trevor's at the age where most of your peers, that's what they're investing in is in Bitcoin.
I mean,
so it's interesting how opposed you are to crypto.
It's like an easy button of like, let me put $1,000 here and have $15 million.
I like that.
Sounds great to everyone.
You might as well. Everybody should have at least $5,000 or $10,000 in Bitcoin. I think, just as it's almost like a backwards insurance policy. Like
That's exactly what it is.
It may really hit you.
That is exactly what it is. Real estate is a get rich slow game. It can be infinite. You can print money through it, but you have to work to do it. And if you supplement it by lowering your reserves a little bit and throwing it into fucking Bitcoin.
He wants you to tell him it's okay to put $10,000 into Bitcoin. Just
No, I don't give a fuck what you said.
Put $10,000 into Bitcoin.
Yeah,
so.
you can put all your excess.
Here's what I'm saying. I could literally reroute just half of my reserves, and that can outperform my entire portfolio over the next 10 years.
Maybe.
And here's the thing. The dollar does not have to go away for that math to
If
become
that's
a
true,
reality.
you should sell everything and buy Bitcoin.
Exactly. And I'm not saying that that's
Prove
true.
to me you believe this.
Yeah.
Sell all your
and
stuff
this is
now.
what that fuckhead wanted. He's like, well, put a bet on it. Show
Right
me
offer.
your level of conviction.
Everyone send Mike offers on his
We're
real
bringing
estate.
offers. We're buying Mike's portfolio.
Hey, you want to bring me sub 2 offers at 110% of my value? I will do that all day.
I'm in.
And then you're just going to dollar cost average into
Bitcoin.
Well, I'm in.
Absolutely.
I think I would do that too.
I think we have a deal.
Okay,
We just
let's
made
go.
a deal.
All right. So
We're going to buy Mike Nuss's portfolio.
All right. Couple $1 million of equity. Let's go.
I did want to say one of the values, or maybe the main value of crypto, is blockchain technology. And when you talk about a halving in Bitcoin, every 4 years, they produce half as many as they did before.
Right.
And so
Well, technically, the speed to produce more doubles.
So where the white paper says 21 million coins will be minted, whatever you call that, and already 20 million coins are in the world, and so we have less than 1 million coins left to go, and that's going to take over 100 years to happen because of the pace that happens. What ends up happening over time is that it costs a lot more to produce these coins because blockchain technology is billions of servers all over the planet running on electricity to process accounting, basically, right? I mean, this is just keeping track. Everybody's keeping track of transactions or whatever, right? And so what I look at is the intrinsic value. If you're going to go down the Buffett path, which is funny to hear Buffett and Munger talk about how, Bitcoin doesn't do anything, which is why it has no intrinsic value. But if you look at intrinsic value in
what
terms
does gold
of
do?
Well, you can put it in your teeth. You can stick it in a microchip. You can do a couple things. You can make a Rolex out of it. You can do some stuff, but not. You can do more with that than Bitcoin. Probably, still, it doesn't do much.
Didn't mean to cut you off. Go ahead.
And you can go dig up 10,000 more mines right now and go find more gold.
That's a problem.
There's more gold in the earth.
That's a problem.
And there isn't more Bitcoin.
Yeah, and that's where the way it's set up is more supply only gets created if the market deems it valuable enough to create it.
Okay, so here's a pinch point. One of the reasons that scared me to go all in on it is if, in fact, it costs too much to print one Bitcoin, those places, those I mean, those companies that are running these server farms, they're not going to be able to pay the electric bill to make another Bitcoin. And at some point, all the Bitcoins will be minted. What benefit do those server farms have?
Yeah, and that's where the maintenance costs. Yeah,
to continue to run the blockchain when they're not able to mint any more coins.
Mm-hmm.
They're going to have to move to other coins or something, right?
And so
this be all based on Bitcoin.
Yeah, and so this is where now you're getting into the details, and that's how you actually try and predict what it could be worth. And where my aha moment was, because I've created, these things are amazing, these things are fake, this is not real. I still have an issue with this, but the things I have an issue with, that's what makes it go from 1 million to 10 million. Does that make more sense? I look at it this, like if you look at Michael Saylor, his middle case is, his base case is 13 million a coin in the next 5 years, or, and then he has a high case. I see a very worst case is maybe $1 million, if that, off very loose math. And we're right now 10%.
Remember McAfee? Said if Bitcoin didn't hit $1 million, he would eat his own dick on live TV.
Oh, really?
Something crazy. Now he's dead. They stuck him in Spanish prison and killed him.
And so here's where my ahas came, because this is important, is, okay, so we already have a store of wealth and things that people are really not really wanting to own as much more debt. Now, that could be market conditions related, but then gold does have a cost to it. But where my aha moment came was future equity. Out of all the equity that's getting created, out of all the stocks that are owned and bonds that are owned and gold that's owned and all this perceived stacking of, and then the realization of equity when you sell it and trade it, more equity is just going to be created faster and faster and faster and faster. That has to go somewhere. It's not going to be continuing to go into gold. There needs to be a place for future equity to go.
What are the outside forces that cause Bitcoin to go up and down? Like, it's
purely supply and demand.
But there is no more supply, so we already know that. So the more people that are interested in it, the more it goes up.
Yeah.
So
and then what goes down is when people are pulling gains out, right? So demand, you just have, it's more sellers versus buyers. So a whole bunch of demand comes in, the value goes up because there's more buyers than sellers.
So the demand is coming though on the Trump trade, thinking that Trump is going to legitimize Bitcoin.
Well, it's come from multiple areas. Some of it's just come from now ETFs have been formed, and so demand came in. Does that make sense?
You're talking about fungible token. I start to get lost a little bit on that.
So no, ETFs is just a pool. You went and created a fund that says, hey, we're going to go buy this piece of real estate. Give me money, and we're going to go buy this real estate. Mm-hmm. All they said is, instead of real estate, we're going to buy Bitcoin. Mm-hmm. And so like what Michael Saylor's fund is doing right now is, it looks like a Ponzi scheme. All they've done is buy Bitcoin and buy Bitcoin and buy Bitcoin and buy Bitcoin, and then raise more money to buy Bitcoin and raise more money to buy Bitcoin and raise more money to buy Bitcoin. And in that arena, it looks like a Ponzi scheme, because that's what it is. You're saying, hey, we're going to raise this amount of money. We're going to buy Bitcoin. It goes up to this much. Oh, guess what? We're worth more. So now we're going to go raise more money, and we're going to go buy more Bitcoin, and Bitcoin goes up. And for all the reasons I agree, real estate's a superior asset class. I can't go to the Bitcoin seller and say it's worth 97, sell it to me for 80. That does not happen. And so I understand from the Ponzi scheme. But as the more capital gets deployed into it, at a certain point, people do not walk away from their wealth. They're not going to cut off their face to spite their nose, right? So once you have enough wealth stored there, it's not going anywhere.
So
because it can still be traded for anything you need to trade it for to get what you need to get.
So the point of this podcast was, you told us if we take 60 minutes, I can wrap up every single lesson I've learned.
And then you
outside
fucking
of development
sidetracked me
and real estate and business.
Until
What
you
did we learn here?
Bitcoin.
Was that the point? Buy Bitcoin?
We're going to buy all of Mike's real estate.
Don't look at me
No,
like
We're
that.
gonna buy Bitcoin.
I was trying to get somewhere, and you kept me from
Have we got
getting
there?
If
there.
you're
Get there?
sitting
No,
on
I don't
excess
know.
liquidity, put it somewhere smart. Mike is giving a thumbs up on Bitcoin.
The alternative investments, you always look at things in opportunity cost and alternatives. And what I'm saying is, by solely focusing on real estate, I've done two things.
You missed out on opportunity costs.
One, I created opportunity costs in my life. Two, as a real estate owner, especially over the past 6 weeks, I've significantly missed the mark because I didn't understand this asset class.
I thought you just did really well over your last 6 weeks in deal buying. Like the best you've ever done.
Well, I just had to extend another refinance because I didn't pull the trigger on a refinance that cost me $3,700. So
yeah, but
there
you just made like
$1
million on the 2 deals you bought. Why are you worrying about 37?
If they don't go south, which they're already going south because that's what deals do.
Oh, those 2 are?
I mean, cost and construction. We're working our way through it. Yeah.
Let us know if you want to sell them, and we'll buy those.
Trevor, I'm going to sell all my buildings and buy GameStop stock.
I'm in.
I watched Roaring Kitties Netflix thing last
Yeah, it was good.
Yeah.
I
fell asleep.
Roaring Kitties.
No, but what I was trying to get into was just learning more and expanding more, and then you just got me into this tangent because you did what everyone does is you bring ignorance to conversation.
I didn't do anything. I just asked you a few questions.
Mike is fired up about Bitcoin. I like this.
You didn't
It's the
ask
most
a few
fired up I've
questions.
ever seen.
No, you made statements that were false.
Yeah.
Name one statement I made that was false.
You gotta look. You can't look backwards.
I just said I asked you a question. Have you heard the statement? This.
That's not a question. That is
Past performance does
There
not.
was a question mark
that is
at the end of
no. There is a gaslighting statement that you made to send us off track.
I'm not doing anything.
Gaslighting.
Do you think there's a 1% chance you could be wrong, Mike?
As far as it becoming a store of value,
Yeah.
I would say a 0.01% chance.
Okay, good.
Okay, he wanted to say never, but he knew what you said. He knew what you said. When someone tells you it can never go wrong, that's the guy you don't trust. And he had that in his mind, so he's like, I'm about to say never.
Let me ask you
but
this.
actually, it's
Let me ask you this.
0.0001.
Let me ask you this: do banks want to be able to own Bitcoin?
I think that the government wants to have digital currency. I think the banks and the government want to run on
It's easier to track.
And this is another fear is that they say, well, Bitcoin could be like the MySpace of social media, and we really haven't landed on the actual one that we're going to use right now, right? Even though there's thousands of coins.
And that was my statement. And again, so where my aha moment started was when I spewed out on the guy. I said, Bitcoin will only last if it can suck enough value out of our economy that it's stored there to the size you can no longer take it out.
So you need enough allocation to land in that asset type in order to legitimize it to where they're forced to regulate it and allow it to stay there because now it's too big to fail.
The industry in itself will get regulated no matter what. You have to store enough in Bitcoin for that to be the technology that makes the difference. But here's the other thing. You can settle on a different technology to be the blockchain that whatever the government uses. Bitcoin can still have its value.
I have a question. Do you use digital wallets, online wallets?
For me, I'll do cold storage just because I don't.
What's cold storage mean?
Like a hard drive, and then put it in a safe. So then you just
don't want to lose it. Like the dude who has 28 billion sitting in a landmine somewhere, and they've been digging through that place for.
And this is why, like, my dad can't understand it, right? So he's like, "Well, what do you do with it?" And then you have FTX and corrupt people, right? So, well, for me, I don't like passwords. I forget shit. I got a safe. I can get a hard drive and cold storage.
So you stick it in a safety deposit box?
Or a safety deposit box. Yeah.
I mean, at some point, it seems dangerous to store any amount of wealth that much physically, doesn't it?
By buildings.
Well, that's exactly right.
It's a concentrated loss. Like the bank could burn down, somebody could rob the bank. That's the one thing about a real estate portfolio. It's spread out. One of my buildings can burn down. Okay, that's fine. There's 50 others.
And you can have how many ever different wallets, right?
And you can put it on a bunch of different things. Put it in. I mean,
and this reason right now,
I'd forget where they were.
So that's where the 0.01 comes from. Because wealth is just getting bigger and more concentrated. And I saw that as a problem. I saw that as this is why Bitcoin is going to fail, because all it is getting concentrated into wealth. That is the reason it will succeed, not fail.
All right. You heard it here first, guys.
Sell all of your reserves, sit on no cash, buy Bitcoin, and then let Mike know how it went.
But Trevor and I are still buying real estate. You can sell us your deals and go buy Bitcoin.
All right, thanks for listening. Let us know if you agree with Mike.
I don't ever want to bring a topic to the equation.
No, this was great.
This was probably the best episode we've ever had.
Yeah, this was awesome. Thank you for bringing a topic this time.
Usually
it's been your whole month for topics, and this was the first topic you brought, so I appreciate it.
No, you just didn't like the other one I brought, and you're not going to publish it.
Normally it's Dane and Mike fighting. Now it's Trevor and Mike fighting.
No, we're not fighting. I love you, Mike. All right, see you guys later. We gotta go.
If you love this episode, share it.
What a waste.
Thanks for listening. Bye-bye.